Everybody, thanks for joining us. I'm Rick, and this is Cody, and we are hanging out with each other tonight. And we are tied to Cody as being an investor tonight.
Yes, sir.
A lot of experience, starting out being an investor. So if you guys have any questions, big day yesterday with the S&P, bit of a bounce back. Today. So lots to talk about, lots of questions for you as well, Cody. And let's get you started with getting to know you, and that is, how long have you been investing for?
I am going on. I'm in my 6th month right now, actually.
Okay.
Pretty much this week would be 6 months for me.
We got a bit of a delay on you.
Oh, okay. Okay.
Yeah. Okay. So it's like a bad kung fu movie. All right. Well, we'll try and keep going and see how this works out. So what? Okay. Tell us a bit about yourself.
Really.
How often are you investing? What are you doing during the day? Are you working during the day and you're investing, throughout when you get a chance to, when the markets are open, or are you strategizing at night? How does your system work?
Yeah, that's basically how I had been doing it. I kind of follow everything. I get up in the mornings, start reading the financials. I'm usually up. I kind of work some later hours. So, I get up around 7:30, 8 o'clock, start reading the financials. Usually start with like a Yahoo Finance type thing, kind of go from there. Usually, I've got some kind of notifications coming through. I'll jump on, do most of my trading through the Robinhood. Well, all of my trading through the Robinhood app. So I'll go through and see kind of what news they have, especially pertaining to anything I'm invested in. Kind of do a little bit of research there, a little bit of research throughout the night. Kind of jump in there, see how the markets are getting started off around 9 o'clock. Kind of see how you can usually tell kind of how the day is going to go. Pretty quickly normally. You do get some peaks and valleys there. I mean, you get some surprises where it looks like something's going to jump up pre-market, and then as soon as the market opens at 9:30, it takes a dump on you. But for the most part, you can kind of tell how it's going to go. But then, I work nights and kind of wash, rinse, and repeat. So,
wow. Okay. Carry on. So basically, how would you consider yourself to be an investor? Are you a long-term hold, or are you a dividend investor? Like, are you a day trader? Like, how does it work for you?
Well, I'll tell you, when I first started off, the very first stock I bought was a long-term dividend stock, Designer Brands Incorporated. It's actually based here in Ohio, which is kind of what drew me to it. Did a little bit of research on that one and decided that was going to be my pick. From there, when I first started out, I kind of had that one stock that I was focused on. And then I had some penny stocks that I looked at that I was day trading. Did pretty well in the day trading for a while. But then I started working more hours at work, and it kind of took my attention away from the research. And with the penny stocks especially, there's not a lot of mercy on those if you make a mistake. So I went from having a lot of success on day trading penny stocks to getting my butt kicked on those. So I backed off. I started putting less and less into the day trading. Went more with the swing trades and started kind of shifting more and more into long-term investments. So now I would say I'm strictly like long-term dividend stocks. And I'm sure you're familiar with the Robinhood app where someone uses your referral link, you get a free stock. Most of what you get from them is growth stocks. So that's really the only growth stocks I have are the ones I've gotten from referrals. But I have gotten some really good ones. I mean, Plug Power, they're kind of like a sleeper hit. They were just kind of chilling there around $3.50 a share. And then they had some really good news that hit a little over a month ago, and that stock shot up. So
Good.
you can get some good ones off of that. But most of my focus is into, I've kind of shifted probably 95% of my funds into long-term dividend stocks, trying to build that up. Kind of what I do is I allot, I mean, it's a very small amount. I allot $10 a month that I put in there consistently. And that again typically goes into, something dividend, or now Robinhood offers fractional shares. So actually that's the last thing I bought was actually a fractional share of Realty Income, which is kind of one of the bigger, well-known REITs. So a fractional share on that one. And the REITs are really nice because they tend to be monthly dividend payers. And when you get into like the REITs and the ETFs, they tend to be on the higher end of the dividend scale, which you got to do your research on that kind of stuff. Again, the REITs and the ETFs tend to be a little bit safer, and they tend to have a little bit dividend, or excuse me, a little bit higher dividend percentage. You do have to watch that, because once you get into like, I think my designer brands that I bought, I think they're like a 3.5% dividend, if I remember off the top of my head, which is pretty good. That's about the ballpark you want to be in, because when you start getting into your regular company, that's a REIT or an ETF, and they're up at 10, 11, 12, 13% on their dividend payout, it looks really, really tempting, because that's, a good amount of money. But then you also got to look at whether or not that's sustainable long term, how well they can keep up on that. So that's kind of something to look at.
Bright, shiny objects. Watch.
Yeah, you got to watch out for that big time. Yes.
Absolutely. So what was your take on yesterday? Everybody in the stream, hey, thanks a lot, everybody, for joining us. Go and check out Cody's channel. It's scrolling along the bottom here. And obviously, if anybody's new here, say hi and check out everybody else's channel by all means. But what did everybody think about yesterday? Cody, what was your take on yesterday with the S&P dropping the most it ever has in one day?
Oh man, that hurt. I've been watching I've been watching my portfolio just drop. I think actually my last video, oh man, I'm trying to think of where it was at. I was at like 20% drop in the last month, which I've got kind of my niche is that I have a very small portfolio that I'm trying to grow. So to see 20% drop in less than 30 days really hurt. But
did you sell?
I was actually I did not sell out on anything. No.
Okay.
No. I've been kind of sitting on everything, because it's been, we're in about the second or third week of kind of a steady decline. So I've been holding tight on things. I've bought in on a couple positions, but I have not sold out. The only thing I've sold out on, I had I can't even think of what it was. It was I know the ticker symbol is TRIB. It was something that I got. I'm in a stock group for fellow Robin investors, and that was one that was being thrown around for a couple days. Hey, get in on this. It's one of these pharmaceuticals. It was in on the coronavirus research.
Right.
I jumped in a little bit late in the game. I'm going to say probably 10 minutes after I bought in. It's penny stock. It probably dropped 15 cents a share. But it looked like there was still a lot of positive news about it. So I kind of held on, and I think it was maybe a day later, 24, 48 hours later, it shot way back up. So I was able to get out and make a few cents for that one at least. But
nice, good.
Dodge that one. But as far as that goes, that's the only thing I've sold. Which again, I was intending to sell that pretty quickly when I bought in. So, but mostly been holding tight, trying to look for good opportunities to buy in, even if it's just again a fraction or something. Try to kind of take advantage of this opportunity. almost all the analysts are saying, hang tight. You got a couple of them out there that are like, no, this is it. I mean, this isn't just the virus. It's not just virus fears that the recession is here, panic and get out while you can. But I'd say the vast majority of them are saying, hold tight, take advantage of this opportunity to, jump in, increase your positions. You got to be careful what you pick, obviously, because there's some of this stuff that's not going to completely rebound. Obviously, like right now, your airlines and your cruise ship companies, your Carnivals, Royal Caribbean, those are down almost 50%.
Yeah.
Those are going to come back eventually, but you might have, like a grocery store chain that might have dropped. Yeah, that one's going to come back, but it might not come back as high as it was. So you got to kind of pick and choose what you're getting into. I mean, there's some of that stuff that you can definitely tell is tanking strictly because of the virus. My latest video that's up, I talk about AMC, which is movie theater chain. That one, I don't know when it rebounds if it's going to get back up to that $8 and $9 range, but that is going to have a nice rebound. I mean, that one, it is pretty evident is down because of the virus fears. I actually talk about that one. They say the reason they're going to struggle to get back where they started from is last year you had all these just epic blockbuster movies from Marvel. You had these Oscar contenders like with the Joker movie and just, all these amazing movies that everybody wanted to see. And this year, there's some movies out there being advertised, but nothing to the level of those Marvel and Joker movies that were out last year. So they're kind of, down in general because of that. And then when this virus kicked in, then it just went down even further. But for the most part, I mean, you look at, your Caribbean cruise line type stocks, they're going to rebound. They're going to go back right where they were at, but you just kind of got to watch out for that. Strike while the iron's hot. I did see my friend, I think he just actually posted in there, and I saw this morning he had mentioned he's throwing $1,000 in there, taking the Warren Buffett advice to get in there while prices are low. So this is a really good opportunity to get in. And that's the video I actually posted yesterday. I really tried to explain that to people, that it looks like it's a really good time to panic and freak out, sell and run with whatever little bit of money you can save. But in all honesty, it is honestly a really good time to get in, especially for someone like myself that kind of specializes in a smaller account. And I was kind of telling you here before we went on the air, the way I got started is when I decided I was going to get into investing, I started watching the different videos, and there's quite a few out there. If you look at like, the $0 millionaire video, a bunch of those out there, and they show you how you can take and most of them, I mean, it's pretty much clickbait, but they advertise as, oh, you start with nothing and we'll show you how to be a millionaire. But then you watch the videos or you follow along their series, and it's all, oh, just put $1,000 in, just put $5,000 in. You can start off with this real small amount. Now, for somebody like myself that's working a full-time job, or you're, another average Joe out there, I mean, $1,000, man, that's like life money right there. I mean, that's depending on where you live at, I mean, that's a house payment. I mean, that's a house payment and a car payment. So if you did muster up $1,000 or $5,000, take the chance and throw it in there, and you don't know what you're doing, or things don't go the way you thought and they drop, I mean, you're toast. I mean, that would be devastating to like your average Joe. So that's kind of where I thought, that I could come in and show that you could start off with a small amount. The amount that I picked to start off with was $30. I mean, I said that, hey, this is an amount of money that you can start off getting a couple of decent stocks out the door. And if I lose every cent of it, I'm not going to lose any sleep over it. and just kind of show that, hey, you can start with this itty bitty amount, grow it. And I actually ended up doubling that money within probably 2 weeks, or just over 2 weeks. I had doubled my money, and we kept growing from there. And again, kind of like I mentioned before we got started, is we were doing pretty well. I mean, we were well over the $200 mark, and then everything hit a couple weeks ago, and it's just been devastating. I mean, I lost over 20% in the past 2 weeks. Today was pretty decent. We started going back up. I mean, right after the market closed, I kind of jumped in to see how we were doing, and I was up, I don't know, $5 or $6 on the day. So again, being a larger account, yeah, that's not a big deal, but being a small account, I mean, that's a huge percentage. I mean, that could be like 5-6%. So just kind of shows you, you stick with your guns. And I didn't panic selling anything, and now I have 15 holdings, and I want to say 13 of those at the close of the market today were back in the green. So again, you just got to be patient. I mean, now granted, we're going to have peaks and valleys right now. They're saying that you're going to kind of have to hold off here about maybe 3 to 4 months. They said basically into the second quarter of the year. Most of these companies are going to be down because it's going to take time to come up with the cure for this virus and kind of get everything settled down from that. And then once the dust settles, you're going to see who's going to come back for a win and who's going to stay down. So, that's the biggest advice I give right now, is just kind of hang tight, because it is going to be into that second quarter. So, you got at least a couple more months here before things are going to calm down. Because even if, when they come up with the cure, or a better treatment for that coronavirus, it's going to take time. I mean, this is worldwide. This isn't isolated to one area, so it's going to take time to get out, all the testing done, and kind of let the dust settle there, and then things will start rebounding, and you'll see who's going to come back up and who's going to kind of start to fizzle out a little bit. And then again, like right now, what's the big one I keep hearing about? I don't know the actual name of the company, but I see the ticker symbol a lot. IBIO. That's one that's big in the coronavirus research right now. People are making a ton of money off of that right now, but that's another one of those that I wouldn't look at long term. That's one you're going to make a lot of money in the short term. You can make some good money off of that day trading, swing trading, because with the amount of news right now, off of that company, you're going to get some really big peaks during the day. So you can get in at a low point. It's going to jump back up, probably drop off. It's been going like that for about 2 weeks now, because it seems like again, the group that I'm in, everybody's all rainbows and sunshine through the week, and then by Friday, everything kind of starts to fizzle out, and you're like, oh my gosh, should I sell? I'm going to lose everything. And then all of a sudden, the same people are in there Monday saying, hey, look at this, I went up over 100% today on a jump, a big spike. They got a news, they've got some breakout. So got to really watch that, because that's one that you can make some serious money off of right now, but long term, it's probably, like, again, once everything calms down, all the fears calm down, and we get the a vaccine or a cure out there, a company like that is going to steady out. You're not going to get those big peaks and valleys where you can make these thousands of dollars right now. But again, that's the kind of stuff you want to watch. Again, you don't want to take advantage of like this, but that's the kind of stuff that gets really big movement on stocks, rather than your day to day. Hey, financials are out, we're going to go up, we're going to go down. This kind of stuff, when you get some kind of catastrophic event or a big breakthrough, that's the kind of stuff that makes that stuff really skyrocket, and where you can get in there and make that money. So, but again, if you're not looking for something that risky, because that kind of stuff is risky, because again, there's so many peaks and valleys throughout the day, and you don't know which dip on that kind of stock is going to be the last one before it kind of stays down. And then you're kind of stuck holding a bunch of literal pennies. So that's where I kind of started moving more into that long term. Again, that's why it's such a good time, to get in there and start increasing your positions in these long term companies. The ones that are harder to get, like your Disney dropped quite a bit in the last week. That's one that's pretty pricey, hard to get into. So, it's a good time to get into like a Disney. You got your Microsofts are down, your Amazon that's normally up around $2,000 a share. I mean, you can get in, $1,400-$1,500. And again, you might not have $1,400 or $1,500, even though it's a really good buy-in point for Amazon, which that's more of a growth stock rather than a dividend. But it's still a good buying point. You might not have that much, but again, most of, if not all of the investment firms have fractional shares now, so you can at least get a little bit of, a stake in those companies, or it's at a point where you can just completely buy in. Because I'll tell you, like a month ago, I probably couldn't have bought in on any of these cruise lines, and now I don't think there's any of them that I'd have to sell out of something, because I try to stick to my $10 a month. But for the most part, they've all dropped around between 40 and 50%. And it presents a perfect opportunity to get a full share of a dividend stock that you couldn't have afforded a month ago. So kind of looking at that and trying to take advantage of that while I can. And again, I mean, you got to really watch, because if you wait too long, like today, things start to shoot back up and they start to correct themselves. And granted, things might drop off again tomorrow. It depends on what's going on in the news, but it could be, the start of a rebound here. So we'll have to wait and see how that plays out. But hopefully, if this is the start of the rebound and things are on their way back up steadily, that you were able to get in while you could there on a good price. So,
okay. Wow, we're over 22 minutes in. You are the best guest to have. I've asked like 2 questions. Awesome. Thanks.
Well, I can talk. That's one thing I can do.
Q's got a question for you. I was going to write a little note saying, Q, you got to wait in line here, because I'm next with the next question. I'm sorry. I'm trying to get some questions in. That was awesome, Cody. That was fantastic. That was really cool. Now let's get to Q's question. So he's got one for you. Does Cody have a personal favorite stock that he owns?
I have a tie. If you've watched any amount of my videos, you're probably screaming it right now. The very first one I got into was Designer Brands. It's a clothing company out of Columbus here in Ohio, where I'm from. They own, what's the biggest thing they have? Designer Shoe Warehouse. They just opened a chain of nail salons. I absolutely love that. And then AMC, the theater chain, I really like them. And actually, probably right there at a close third is Washington Prime. That is another REIT. They are mostly invested in like strip malls, mostly through Ohio. They've also got a couple places out. I want to say in Arizona, Texas, and I think they have one place in California. Really love Washington Prime, and that's another one. They're based out of Columbus, Ohio, also. But if you have a chance to see like one or listen in on one of their earnings calls, or I think actually if you look it up on YouTube, their CEO's done a few interviews. He's just real high energy. He's not your typical CEO of a company that big that's kind of like stuffy and all about the numbers. Literally the first time I heard him on anything, I just happened to pick up one of their earnings calls, and one of the they have different, it's like some of their higher stakeholders will call in and ask them questions during their earnings call. And I can't remember what the company was that asked him, and he's like, "Yo, dude, this is what's going on right here." And you don't normally hear that. You know, I mean, yeah, granted that sounds a little bit unprofessional, but in the context that he was doing it, I mean, it just fit perfectly. But I really like what they're doing, and if they have a struggle with something, they're very good at reacting, and that's kind of something that I look for is. Kind of their management team. It used to be my favorite stock that I talked about was the Naked Brand Group, which they're out of Australia. They own, they have all the Heidi Klum clothing line. They also own Fredericks of Hollywood. I used to talk about them nonstop. I mean, that was like a literal penny stock there. And I followed them through a lot of hard times, but it just got to be evident that as their stock price kept declining, they did a reverse stock split. So they were up around $3 a share. And within 2 weeks, they were down under $1 again. And they just do absolutely nothing to fix it. It's just like, they're just, I guess, hoping that for the best. I mean, they don't do like when Designer Brands, they went through a hard time. And it was pretty clear that the like your box stores were kind of starting to fizzle out because a lot of places are going to like the e-commerce. They were very reactive. They went ahead and they said, "Hey, we need to do something." So what they did is near all of their Designer Brand stores, they started opening these nail bars in the different malls and things that the designers are in to try to kind of pick up business. Hey, we're going to get you in here. You're going to get your nails done. And, oh, hey, by the way, you're sitting next to the shoe store that we own. So, they were kind of very reactive to or proactive when they saw these changes coming, that things are moving towards e-commerce. Whereas like the Naked Brand Group, they have a very big e-commerce presence. But as things started to decline and they started to see hard times, you're not really seeing them do anything. I mean, they're not being proactive. They're not even being reactive. They're just kind of sitting by going, hey, hopefully, this works out for the best. And it's not. So that was one where I was like very emotionally invested in the company. Just, I just kind of sat there and kept hoping and hoping and hoping for the best. And then like it eventually got to the point where it was 100% evident that, hey, this is not going to work out. So ended up, I sold out my shares. Gosh, I'm trying to think of how big a loss I took on that. I mean, it wasn't much because I had pretty much sold out of almost everything. So I was down to like my last 2 shares and I sold out my last 2 shares. I want to say I lost around $5 when I sold my last 2 shares. Overall, I had a loss on the company, but that last, when I kind of finally parted ways with them, it was about a $5 loss because I bought in when they did the reverse stock split. The one share that I was left with, again, it was worth around $3. And then I went in and bought in again when they were down to $2.15. And when I sold out, they were at like 45 cents a share. I think they're actually back up to about 45 cents a share right now. But again, they're not trying to help themselves very much. And I'm big on the kind of looking at the management. And I kind of picked that strategy at a really good time because without even knowing that this virus stuff was going to hit, I started looking more at the management side of things and how they respond and kind of what they were going to do based on what market they were in. Real quick, to kind of answer Sherry, your question, I haven't actually bought into any cruise lines. I just wanted to throw that out as an example of one that if I were going to buy in, which I still might because they're still down, I'd have to look because I got a couple in my watch list and I can't remember off the top of my head. Oh, she's gonna love that, Rick.
Yeah. Check out her channel and subscribe. Welcome to the community. And you're very welcome.
there's some really good ones out there. Sure, you got Royal, and Caribbean Cruise Lines are probably the biggest ones right now that you can look at to buy in. I'm kind of drawing a blank. I know there's a third one I had. It's not on my watch list, but there is one that I kind of had an eye on. But I haven't personally bought into one of those yet. But I just wanted to make sure that that was a good one. That's dropped quite a bit, but is definitely going to be rebounding. So wanted to make sure I gave those. Same thing. Your crude oil stocks, those have dropped right now. And I don't honestly have any examples. I mean, ExxonMobil, I guess, would be an example, one of those. I know, my good friend Anthony over there at Malone Money Mindset, he's in the chat. That's one that he holds. You got, Anthony's been on the show before. If you guys haven't checked out his channel yet, make sure you check him out because the guy is like a psychic. He buys just these he and I got into a good conversation about Aurora Cannabis. I had bought, that was like probably the first month I was investing. There was some really good positive news out there about Aurora Cannabis. So I thought that was going to jump. So again, that was when I had like nothing. And I think I had I think I put my last $5 on that stock. Actually, I remember exactly. I bought in at $5.17 a share. And that was one of those that immediately started to tank. And so I'm like, 6 months ago, I was still like really, really learning. I mean, I'm going to be learning for a long time. I mean, there is so much to take in when you're investing. But, that first month that I was in, I honestly knew nothing. And I did quite a bit of research before I jumped in. And so I was like, oh man, I wanted to sell, but, again, I was like looking at the analyst ratings and they were saying, oh, it's going to come back. It's going to come back. So I kind of held on to it. And I think I had to hold it for about 2 weeks. And I got like one opportunity. I set a limit sell at like $5.25 or something. And there was like one little spike about 2 to 3 weeks after I had it where it jumped back up. It hit that limit sell. So I was able to make a profit off of that, but then it immediately started tanking. It's been going down ever since to where it was like, down under $2 a share. And then all of a sudden I see Anthony, who's got all these amazing investments. I mean, he's just like really got top-notch companies that he's investing in. And then just like I'm watching this video and then randomly he's like, oh yeah, I threw some money into Aurora Cannabis. And I'm like, what the heck is this guy thinking? I mean, this guy's like, got these really good investments. And then he throws this randomly throws all this money into Aurora Cannabis, and then boom, 2 days later, the freaking price shoots up, and he's like, he looks like a genius. And nice. Anthony, can you remember the other one that we were talking about? Because there's another one he had like that.
I don't think Anthony's
where it was like, what the heck was he thinking?
He's on his way home. I don't think Anthony's on the chat anymore.
Oh, okay. Yeah, there was another one he and I had been talking about where it dipped real low and no, I think I know what it was. I think it was IBM because it was like a day after Warren Buffett sold out of like all of his shares of IBM, and everybody was like, oh, it's the end of IBM. He buys in, and it's like, wow, what the heck was he thinking? Did he not see the news on that? Maybe he didn't see the news. And I think we talked about it. He said he didn't. But then it ended up, again, spiking way back up. But that's one he has as a long-term investment. So I think he's still up on that position. But again, I mean, he just like has these crazy out there, you'll think it's some random investment. And then all of a sudden, boom, it shoots up. So he's just got a real gut for that kind of stuff. So he's a good one to watch because he's got these kind of picks that he ends up, they end up being home runs.
Yeah, definitely. He's a great guy to watch. Great guy to watch.
Yes, definitely.
So, all right. Got my second question for you.
Okay.
Cody, you're doing awesome. Thanks, man. You're making my job tonight easy. I love it. What do you enjoy most about being an investor?
Oh, man. What do I enjoy the most?
Yeah.
Maybe like seeing your hunch pay off. Like if there's, something that you kind of, you don't know if it's going to work out or not. And you kind of, invest. That was more like, that's where I still, like I said, I've gotten out of day trading and I've moved into more long term. But there's stuff, if I see it and I kind of get a hunch, because I'm pretty good. That was one thing, I guess, where I had an advantage is I didn't really know anything about investing. I mean, I did probably 2 months worth of research before I got in. But just for some reason, I've got a real knack for reading the charts, and I can kind of I pick up on the trends very quickly. So it's kind of neat when I'm like, okay, I'm pretty sure, what it looks like on this chart, that's gonna jump up, and so this is a good buy-in point where I can make a little bit of money here. So just kind of seeing those hunches pay off, or when I'm sitting there kicking myself, telling myself, oh man, I should have sold out. This one's tank, it's tanking, it's dropped. I thought it was just going to be a dip, but now it keeps going down further. And then all of a sudden it shoots back up. I mean, that's a great feeling, knowing that your hunch to kind of stay there to either buy or sell paid off, and that, you were kind of right. So that's been pretty cool, getting in the investing game.
Good.
Kind of funny story. I guess I kind of have had a hunch for that kind of stuff, because back, we're talking 20 years ago when I was a senior in high school. There weren't any e-brokerages. There were no Robin Hoods or Weebles. You had the newspaper that you had to read to get all your stock prices and everything. I was actually in a group in my high school. We were it was a nationwide, it was to help you kind of learn about like stock investing. It was a nationwide contest to kind of see, you got like a set amount of fake money, and you could do whatever you wanted with it. And I mean, you had to factor in that there was a brokerage fee if you wanted to make a trade kind of deal. And they kind of designated me to pick out the stocks for our team. And I went through and I was like, I saw Yahoo, which was kind of in their fledgling days. And I'm like, oh, we got to get Yahoo. And I guess the really funny part of it is, when I first read it, I thought it was Yoo-hoo, the drink company. And I love Yoo-hoo. So I'm like, we got to get this stock. This is the one right here. And it was actually Yahoo. And I'm like, well, we've already committed to it. So, let's get this. But everybody was kind of hesitant at the time because nobody ever heard of it. So we only put like half of our money into the Yahoo. And I can't even remember what we put the rest in. But we ended up like in the top 100 in the country. And all of the 99 that were ahead of us had invested everything into Yahoo. The team that actually won put everything they had into Yahoo right off the bat, and then everybody else behind them kind of increased it through the course of the competition. But that's just kind of a funny story, that I was, even back then when I had no interest in ever getting into investments, and I was able to pick like a big winner like that. And then obviously Yahoo has kind of dropped off the map lately. But back then it was a big pick. But I'm hoping I can get another pick like that, that you just kind of knock one out of the park with it, even if it's something random where I think it's like a drink company and it turns out to be something else, but it ends up being a winner. Just, kind of bring a funny story full circle. That would be excellent. But, time will tell, I guess. Time will tell.
Absolutely. So who are you learning from? Who are you following here on YouTube as investors?
As investors, I think the big ones I follow, obviously Anthony over at Malone Money Mindset. He's the one I kind of like the most right now. Keenan Grace, right up there with Anthony. And it just works out that the three of us have really interacted well through chats and that kind of stuff. All very supportive of one another. Those two guys definitely by far my favorite. I love watching the Jake Jones videos. He's just got a really soothing voice. I don't know. I mean, there's something about, if you haven't seen Jake Jones, check him out. He doesn't post real consistently. His videos are kind of hit or miss. He's not on like a regular schedule. I think he said that he works and goes to school and everything else, so he kind of posts when he has time. But he has some really good. He does a lot of research, because there's some of those out there that I found when I first. I don't want to name drop because I don't want to hurt anybody's reputation, but there was one guy that I followed, just seemed like a pretty cool guy. Before I knew him, he's still a pretty chill guy, but I started following him when I first got in the game. But it was pretty. It got pretty evident quickly after I started learning more and more that he was just taking advantage of having, I think he had like 15 or 20,000 subscribers, and he was basically using that to help his own positions where he would just like, what kind of threw up a red flag was he was suggesting all these stocks that nobody else was. And I was like, well, maybe he's just ahead of the curve. Well, then it was actually some of these other guys that I watched would actually name drop him and make fun of him, kind of like, hey, it's this guy over here just trying to help out his position. He's always talking about this garbage stock, so everybody will buy it and increase his value. So I kind of got away from him. But again, I don't want to name drop him. I don't want any negative attention to him. Graham Stephan is a big one that I follow. Andre Jick. I really like Andre because he's got kind of that rags to riches story. Because he just started his YouTube channel, I believe it was like March of 2019. And I know he's talked several times on his videos that he was homeless at the beginning of 2019. And then by the end of 2019, he was like a multi-millionaire, amazing house, amazing girlfriend, all that stuff. Okay. Now, granted, he said he's had some things that he was invested in. And I want to say he had like $75,000 worth of stocks that he never sold out of, even when like he was homeless. So yeah, he was homeless and kind of started off from scratch, but he did have, kind of a little bit of a nest egg that he was hanging on to. But to his credit, if I were homeless, I would probably sell out of that to not be homeless. But, he stuck with his guns, very frugal. He's gotten into, I know he's in the movie industry. I think he said his channel actually started as a magic channel. He was like a consultant on How You See Me. He taught a lot of the actors some different card tricks and things. That's like obviously his passion, but where he's made his money on YouTube was through the finance videos. So you got Andre, you got Graham. I can't remember his name. I don't watch too many of his videos anymore, but the financial education channel. He mostly talks about different stocks, but if you look at his older stuff, he would actually do different breakdowns where he would every week he would pick so many stock terms and break down those stock terms and show you, hey, this is what this means, this is how you apply it. That's kind of where I got interested in him. I'll still watch him once in a while, but mostly now he just talks about Tesla. That's his big thing is he talks about Tesla because everybody says he's nuts because he keeps buying into Tesla. And then of course he looks like a genius. Now, he was like $100 a share and it went up to close to 900. And even though it dipped down to $600 a share, I mean, he's still a winner there. So I think his name's Jeremy, if I remember correctly. But those are kind of the guys I like to watch. Again, like Rick, I like, watching your channel because I like the entrepreneurial stuff because I'm starting to get back in. And that's something, one of the reasons I'm investing is kind of a long-term, my 10-year plan is I want to semi-retire by 49 and, kind of focus more on passion projects. There's a couple of businesses I'd like to get into. So I'm hoping to use these investments to fund that, either the startup for that business or, to get where I'm making $1,000 or $1,500 a month just on dividends. So that I'm able to afford to work part-time or, if I'm not making what I'm making now, that, my dividends will supplement what I lost. So, I definitely like watching the entrepreneurial channels. There's some of them, I'm trying to think of what it is that are a little bit over the top. I try to stay away from the fake gurus, as they say, like your Grant Cardones. I mean, you can pick up some good advice. I don't want to discourage people from watching like a Grant Cardone or like a Dan Locke, because even though they are like way out there, and their whole thing is to sell you the 1997 course, where it escalates into you're trying to spend $50,000 for a course where, you know, they're making the money and you're probably not going to make anything off of it. There are things that can be picked up from them. So, you know, I don't want to and they're entertaining. I mean, it's just fun to watch some of those guys and to see them talk. I mean, it's like when Donald Trump used to have the Apprentice show. I mean, that was just funny to watch. You know, how he interacted with people, and you're like, gosh, how did this guy get to be a billionaire when he's just like nutso on some of his ideas on his show? But I mean, there are things that you can pick up even from the craziest of person, or the most unscrupulous. I mean, the fake gurus out there, you know, just trying to you know, sell their courses. There are things you can pick up from them, and some of them really do have good backstories. I mean, even if their focus now is on, you know, taking your money, there are still things that can be picked up, and it's just like you know, they used to tell me, even you can learn something even from the worst job, even if you hate a job or you have the worst manager. You know, forget their bad qualities or remember their bad qualities. Just make sure you don't carry their bad qualities. Make sure you pick up their good qualities, and you know, you kind of want to.
Yeah, exactly. So, hey, before we go into the next question, Cody, if everybody is on the stream right now, if you could just go and hit that like button, that would be greatly appreciated. It definitely does help with the algorithm. Thank you very much. Thanks for joining us. Okay, Cody, next question for you. What makes a good investment for you?
Ooh, that's a tough one. What makes a good investment for me?
Yeah.
Again, management, how they you know, kind of looking at, you want to do your research before you invest into anything. So I look at kind of the history of the company, how long they've been around, how stable their management team is, if there's been any negativity in the company, whether you know, like I mentioned with your Washington Prime, your designer brands, where, you know, things are going away from the brick and mortar stores into the e-commerce. How are they responding to those kind of changes? Want to look at that kind of stuff. Longevity, again, you're looking at how long have they been around? Are they growing? If they're not growing, are they at least consistent? Because if you look at let's think of a good one, like a Coca-Cola or a Pepsi. You don't see them branching out much anymore. You know, they've got their little sub companies, like they've got their Monster Energies or their Powerades, that kind of stuff. But for the most part, they have their set products that they have. But the products that they have, they do well, and they're things that are going to keep selling for years and years and years. So you know that company is going to be stable. It's not going to go anywhere. It's very popular. You want to avoid you know, the riskier things, like if you're, you know, like as far as long term goes, like again, your brick and mortar, your old school, like your Macy's, your J.C. Penney, that kind of stuff. The ones that are mostly a brick and mortar operation, and they're kind of starting to die off, and they're not doing a very good job of reacting. Kind of unfortunate, like, if, you know, along that line, you look at a J.C. Penney. They brought in like a new CEO in the past year. They tried to make some changes. Their stock price went up. They beat expectations, I think, last quarter, but then it has dropped right back down. But they were at least trying. And like I grew up with J.C. Penney all around me, so like I really feel for them. That's one. That was actually one of the first companies I bought into. Again, kind of before I knew enough about investing. I think I bought in at like 90 cents, because I'm like, oh my gosh, J.C. Penney's selling for 90 cents. No way. I mean, that company's got to be worth at least $5-10 a share. So that's going to go up, and it's going to go crazy. And it's been pretty consistent right around $1 again, until recently, they had a nice spike up to, I think they went as high as like $1.40, and then now they're back down to like 70, 80 cents. But yeah, I kind of look for that longevity, how the management responds to adversity and changes in the market. Going back to, this is not one I have, but IBM. I'm trying to think of what I read there, because they were basically, their big thing was their microprocessors, which they weren't. They kind of were the industry leader there, and then they kind of started to get overtaken by some other companies. So they actually sold out, and they started moving their. I can't remember what they moved their focus to, but they kind of changed gear, saving their company. That Nokia kind of did that, where they were like the
Lost both. Oh, there we go.
Oh, I'm sorry. What was that?
We just lost ourselves, but we're back.
Oh, okay, perfect. Yeah, Nokia cell phones. That was another one where they were kind of like the industry leader, and then they ended up taking a back seat and kind of changed gears. And granted, they're nowhere near what they used to be, but definitely made some positive changes to improve and stay relevant and get their name out there. And they're starting to grow again in popularity. So that's the kind of thing I look for. Is management's a big one, and then how long have they been around? What market are they in? Are they going to be around for years to come? Again, because like I'm looking for a long-term investment. I'm looking to grow my dividends, and you want to look at that dividend history. It's nice that they pay out a dividend consistently every year, but are they also increasing their dividend amount? And then that's a whole nother ball game. Is are they staying in a percentage of increase on their dividends that they can maintain, or are they kind of getting up to where it's going to, like I said, you want to 7% is kind of where you want to start really looking hard at whether or not they can afford to sustain that high percentage of a dividend. Once you get over that, it gets harder and harder. So you want to see is if the company is increasing their dividend every year, can they afford that long term? Or the first time they have a bad earnings year, are they going to take that dividend away or drop it down again? So you want to look for that kind of consistency. And I mean, there's a ton of sites. I mean, the NASDAQ has a site where you can look up dividend histories. Dividend.com is one that I use a lot. What's the other really good one I love? Dividendchannel.com is another good one. It gives like really good breakdowns. I think Dividend.com, I think you have to subscribe, and I think you might have to pay to get like a lot of in-depth information. But Dividendchannel.com will give you that really good in-depth history on the company and their dividend history, free of charge. The only catch to them is I think you're limited to 4 searches in a certain amount of time before they kind of cut you off, and you have to wait a little bit before you go back there. But that's kind of one that I use a lot, is that dividendchannel.com, to kind of do my research to see how their payouts, how consistent they are on payouts, and to kind of break down the percentage, and also see kind of what the expectations as far as the stock price goes. Because again, I'm dividend focused, but I also want to see the stock grow. So I'll spend time looking at what the analysts think the target price is a year out, see if it's one that's going to grow or stay the same or drop off, because you want to make sure you're not just because you really like the company you want to buy now. I mean, if you've got the money, great, go ahead and do that. But like, my portfolio being a smaller portfolio that we're trying to grow up, we want to make sure we have the best buy-in point possible before we jump in. So you want to see what the history on the stock price has been the last few months, to see if you're at a good buy-in point, or if they're predicting that in a year something's going to happen and the stock price is going to be a lot lower than it is now. Granted, if you're getting the dividends, you're going to make some money. You might lose a little bit initially, but that dividend's going to offset what you lost. But you want to make sure long term you're going to come out ahead. So I mean, that's kind of what I look for when I'm investing in a company. And plus, I'm kind of like, if I see a company that's from Ohio, where I'm from, I don't know what it is. Like, I'm weird about Ohio, but I'm like, oh man, I'm interested in that. I gotta research it and see if it's something I can get into. So I'm kind of a sucker for the local companies too. But at the same time, throw money into something that's going to be a dog.
Yeah, absolutely. So explain one of your best investments that you've done.
Best investments that I've done. Well, until recently, the designer brands. Again, I picked a real good buy-in point for that. I got it around $16 a share, and for the longest time, it was up around 17. So it had a really good dividend. It paid out, I think it's 20 cents a quarter. It pays out. It had one dip. They had one bad earnings call back in October, and the stock price dropped down. It was the first time in like a month it had been down in the $16 range. So I bought in at a second share. Of course, now everything's dropped, so you look like a turkey. But overall, that's really good. Some of the penny stocks that I got into early on, which some of my, they were definitely day trades that were like a one and done kind of deal. I don't remember the names on them anymore. A while ago, but some of those, again, where I kind of saw that I had a kind of a natural knack to read the charts. Bought in at, get 100 shares at 5 cents a piece, and then, you sell them out at 7 or 8 cents a piece. So those are kind of some of the ones I'm more proud of and that I like. But overall, just without any knowledge of the stock market or investing, just doing a couple months worth of research to see not only what, brokerage I wanted to use, but how to invest and the things to look for, kind of going right out of the chute at this company that doesn't get a lot of big news, Designer Brands, and that ends up being a winner where, they seem to have a good management team, which that's not something I focused on then, but it's something that I'm definitely focused on now. But they had the good management team. They respond well to adversity. And again, they're growing. They're responding to the trends in the market where the brick and mortars are kind of starting to die off. But that's definitely one that I'm really proud of, is that I was able to pick a company that kind of has their stuff together without having any knowledge of what to even look for. Just kind of basically picked a winner right out of the chute long term. And then I didn't even know really what dividends were when I first started. I knew a little bit, but it wasn't something that I was looking for. I was just looking for a good stock, and it happened to be the very first one I bought was a really good dividend stock that pays out a higher dividend for as a low a share price as it has. So
got it. Okay, so All Good's got a question for you. Do you invest in ETFs?
I'm trying to think if I have an ETF right now. Yes. Trying to think. Voya Natural Resources, which is ticker symbol IRR. I believe they are considered an ETF in the energy field. That is one. I'm trying to think of the story behind that one. It was one that I had bought when I first started out. I think I was actually starting to read about ETFs at that time a little bit. Oh, I know what it was. I was looking for something that was paying a dividend, or it was going to have an X. If you're not familiar with investing, X dividend date is the date you have to own the stock in order to get paid the dividend. So I was looking for something that had an X dividend date that week, and I think I want to say I had about $4.50 in my buying power that I could use. So I was just trying to see if there was anything out there in that price range. And Voya was actually at like $4.08 a share, something along those lines. And they were going to have their ex dividend date was the next day. So I'm like, oh, I'll give these guys a shot. Did a little bit of reading. Looked like they had been around. I think they'd been around since like the 80s, and looked like they've got several variations. I mean, there's some of those ETFs like Vanguard that there's like 20 different Vanguard ETF fund out there. Same thing with Voya. Voya has, I think, 5 or 6 different variations of things that they are invested in. And they seem like it was, pretty solid. And that was back when I was still investing in penny stocks, which I've kind of moved away from. Even long term, I try to avoid penny stocks, but that was one that I jumped in on for the dividend. I think it paid out like 8 or 9. It seemed like a pretty good dividend for the price. You're getting a stock for $4 and it's paying you 8 or 9 cents every quarter. So that's the only ETF I have right now. I do believe I have about 3 of them in my watch list. I know one of them is a Vanguard, which Vanguards are really nice. I actually did a whole video breaking down ETFs. Going back to the one I have, the Voya, that's actually what's called a closed-ended ETF, meaning it's as close to like a regular stock as you can get, because like your ETFs and REITs, it's like unlimited. As many people want to buy into that, you can buy as many shares. There's not a set amount of shares out there. They just take that money and reinvest it or go out and buy more holdings in whatever industry they're in. But a closed-ended fund is like a normal stock. Like designer brands, they might have 300 million shares of open stock, and that's all the stock that's available is 300 million shares. Whereas like a Realty Income, which is ticker symbol O, that's the one I just recently bought into with a fractional share. That's like unlimited shares. So your Voya, that's a closed-ended fund, so there's only a set amount of shares out there. So if all those shares are sold, you have to wait for somebody that wants to sell. So, yeah, IRR, Voya did drop. They, which again, about everything dropped. They were up well over $4. Actually, right after I bought them, they dipped down into like the 350 range, and then they sat there for about 3 months, 3.5 months. Basically at my buy-in point at like 410. They were doing pretty well, but then now the past couple of weeks they really tanked. But yeah, everybody's kind of down right now though. Yeah. So that's where you got to kind of tight.
The ups and downs of investing in life that happens, right? So, all right, Q's got a question for you. When did you know how important investing was?
Oh, honestly, I wish I knew 15 years ago. But it was really in this past year when I saw what it could do for me. You see it throughout the years, kind of people that get into this into investing and how well off they are, that they can retire early. But now that I've actually got set goals and like I've put pen to paper on not just a joking, hey, I want to retire at 49. Now there's like a set plan on how I want to do it. I really saw that investing is something that can get me there, not just because your stocks are going to continue to grow, but if you get into the dividends more and more and more, that's more income, that passive income that you don't have to do anything but sit back and watch come in. And again, you find the right buy-in points on this stuff, and you can keep increasing your positions in your portfolio, and it's just more and more, passive income that's going to come in every month, and it's going to help you get to those goals where pretty soon, you might, like I said, you might get $1,000 coming in of every month in your dividends, and you can reinvest that, or you can say, hey, that's seed money for this business goal that I have in 10 years, and maybe in 5 years now instead of 10. And still your target my target is to be semi-retired by 49, but maybe we can get some of those steps in place sooner and, get the foundation going. So within the last year, I'd say probably when I, back in July, when I hit my 39th birthday, that's when I was like, all right, enough talking. Let's start taking the steps to get towards our goal, because 10 years seems like forever. But it seems like I just graduated high school and we just had our 20-year class reunion last year. So time flies as we get older, it gets away from you. So I know that 10 years is going to be here in no time. So,
yep.
Investing is definitely the way, probably the fastest thing that's going to get me there.
Absolutely. Absolutely. Okay. So Jerry's got a question for you. Will investing be your long-term goal, or do you have any other goals? I mean, you kind of touched base on it now, but
yeah, so investing's long term. That's where I'm going to get that passive income from. And I guess more investing. I've been talking to a financial advisor about like some CDs, that kind of thing. So it's just something that's a little, so you have your investments that are maybe risky because I'm picking individual stocks. I'm not investing in like a mutual fund or anything like that. I mean, I'm kind of hand picking what I'm doing, so there's a lot more risk involved. So I'm also looking at some safer plays that are going to get you some interest in like a CD. And then again, the faster I can get, the seed money to get my my business ideas going, the sooner I can start getting income from that, whether I'm 100% hands on or I have to hire someone to help until I can devote to that full time. So investing is a long-term goal. That's something I plan on doing the rest of my life. But then again, like I said, I want to branch out and hopefully do well in business. I had a couple of businesses that I've sold out of in the past that did pretty well, and hopefully when I get into my next business venture, they are even more successful. So, but yeah, investing is definitely going to be a long term forever thing.
yeah, smart. Good for you, Cody. Good for you. So, what are some of the mistakes that you made earlier that you wish you could have replaced or not done or avoided?
Some of the mistakes, definitely not doing enough research. Because like I said, I was doing really well, like day trading penny stocks, but I was doing a lot of reading. Like I was up again, I worked late, but I'd still make sure I was up no later than 8 o'clock, and I, reading as much as I could. And if there was something, even if it was just going to be a day trade, I was still spending a lot of time researching it.
Right.
And then as that kind of stuff, started to catch up with me, I was still getting up at the same time, but I was spending, less time. I was spending more time looking at my long-term investments and just kind of looking at the now on those like day trades. And I kept getting burnt more and more to the point where, like, I would always talk in my videos that you have to kind of cherish those pennies, because a lot of people put focus on, hey, there's no use investing in this, even if it's a day trade, if you're only going to make 15 or 20 cents. But with a small account like mine, 15 or 20 cents is a big deal. So if I'm making 15 or 20 cents or 50 cents every day, that's a big deal. But then, like I said, I kind of, the thing that my success in the beginning, I got away from, which was making sure I did plenty of research, even on a day trade. And I kept getting burnt to where, like I said, like on a naked brand group, I'd buy in at 5 or 6 cents a share, and it would immediately drop down to like 2 or 3 cents, and it's not going to go back up. And so then you're like, well, I'm going to hang on to this, and hopefully it goes back up, and it doesn't. So yeah, definitely not doing the research was a big mistake. And then also, like every video you see on investing, one of the big things they say is don't get emotionally attached to the companies because you'll get burnt. And I didn't listen.
I know you're
yeah, I got emotionally invested, and so when you do that and a stock price starts to drop, even if you can see 100% that price is not going to go up, you're just sitting there like, oh, I'm so hope. I just know, all of the experts are wrong somehow, and that stock price is going to go up, and then pretty soon you've lost $4 or $5, which again, in a small account like mine is huge. I mean, that's a huge percentage on a small account. So now I've learned not to get so emotionally invested. There's one or two companies once in a while that I'm like, I probably hang on to a little bit too long because I just really like them and I'm really hopeful. But as soon as you can see that the writing's on the wall, now I've learned that, hey, it's time to go.
Yeah. Absolutely. Okay. And speaking of which, I've held you on for just over an hour. It's fast.
Wow. That was fast.
Yeah. So let's go for a couple more questions and then we'll start wrapping it up. Oh, you've been a great host. I mean, a great guest. You made me the host of like next to nothing. I've done nothing tonight. It's awesome.
We're trying to make your job easy.
True. That's amazing. Thanks so much. So, okay, All Good's got a question for you. What kind of businesses are you looking at or looking into? Sorry.
Okay. Well, my background is in restaurants. So I'd like to get not necessarily a restaurant. It's really hard to be profitable in a restaurant, especially if it's a single restaurant. But if you get into the banquet and catering side of things, that's where that real money's at. You have less overhead, especially if you can you get a liquor license involved. You can get a bar. There's a lot of money in bars. If I stay local where I'm at, one thing I've been working with, a couple people. I have some friends that are in like the beauty industry. I don't know if any of my beauty channels are out here watching. I haven't seen their names pop up, but there are a lot of the beauty channels that I follow. I'd like to open a nail salon locally. There's just nothing close by, and I think that's a big thing if you're looking into a business. Even if you don't have a lot of knowledge about it, if you have someone under your belt that's really knowledgeable of that. You're good on the management side, you're good on the business side, you take care of the books and everything, you can hire someone really good and really knowledgeable in that industry, and that that you just, especially if it's someone you trust, that can kind of walk you through that. But that's kind of the biggest things. My like long-term goal, which has like been a lifelong goal, locally we have like a real small like a single screen movie theater. It does a great amount of business. Most of the theaters you go to now, the ticket prices are like $15 and $20 a ticket. They're still kind of like the old school 20 years ago. You can get in for $5 a ticket. You can get popcorn and a drink for like $6. I mean, very reasonable. That's something that I is like a lifelong goal of mine, was to own like one of those single screen theaters and just really have fun with it. Bring in, the popular movies, be able to like get that big premiere and, sit there and like, if you wanted to just sit there and have the whole theater to yourself while you're watching like this movie you always wanted to see, kind of deal.
Nice.
That's that long-term goal. But yeah, definitely the banquet and catering side of things, going with my background and what I know the best. Definitely banquet catering is definitely a business I'd like to get into. And also right now the cleaning businesses are really popular. There's not a lot of overhead involved in those. You can get set up with things through like care.com. And it's really easy. I mean, there's always a lot of places looking for some kind of cleaning, whether it's personal or a business. So that's, something that's, low overhead. I mean, if you look up videos on most profitable side hustles, the cleaning companies always pop up right now. I mean, they're very popular right now. So that's kind of what we're looking into in terms of business.
Nice. All right. If anybody doesn't have any other questions, I got one more question for you, and it pertains to your YouTube channel, because that's what we're here for, is to help promote your YouTube channel. So hopefully everybody who's watching tonight has had a chance to go on over and check out Cody's channel. Subscribe if you can. And your last question for you tonight, Cody, is what are your future plans for your YouTube channel?
Oh, I lost you, Rick. What was the question?
What are your future plans for your YouTube channel?
For my YouTube channel, like right now, I've been talking about it since basically the first video I put out, that right now I do mostly my Robinhood portfolio updates. I've already kind of moved into stage 2, where I'm branching out. Like I did a video on ETFs. What are ETFs? So kind of I want to do more of those breakdown videos where I take something in finance or the stock market that maybe people don't know a lot about, break it down. I'm big on motivation, so I'd like to get into some more motivational videos. And just really, I'm always open for suggestions on there. I'm always asking people, hey, throw something in the comment if you'd like to see me talk about something. But really, the sky's the limit. But that's basically my focus. Is I want to do more like terminology breakdown or, things that confuse people. Like I've had a request to like break down candlestick charts. Like right now, as I'm sure you saw when you watched through my videos, most of my stuff I do while I'm in transit between places. That's kind of where I got the idea.
Your car is your office.
Yes. But we are working on, moving into a permanent place. And I've already got like studio space blocked out. And I'd like to incorporate some stuff where it kind of keeps up that driving up stocks theme, but more in a studio environment where I can do more, where I can get a chalkboard or a dry erase board behind me and do more visuals. Actually, it's kind of funny because one of my first videos I did, I said, "Hey, I'm just to put information out there and have it on record. I'm never going anywhere with this channel. I'm never going to buy any equipment." And then all of a sudden, somehow it's taken off and people seem to like it. And my subscribers are increasing. And so now I'm like, okay, people are actually tuning in and watching this. I need to get some better equipment. I can't record on my cell phone forever and get away with that. And like, I want to have guests on my Driving Up Stock show. But I'm sitting there thinking like, yeah, what am I going to do with a guest? Like, pass the cell phone back and forth while I'm driving. So yeah, I really need to start investing in like some, at least kind of make it a little better. Yeah.
That'd be a lot of fun. So, all right. So on that note, if anybody doesn't have any other questions for Cody tonight, I think we should wrap it up. It's been an hour and 15 minutes. I said it would be an hour, so extended a little by 15 minutes. Thank you very much. Appreciate it. It's been great. So, all right, Cody, is there anything that you want to say to everybody? Any last words that you'd like to put out there to everybody?
No, I just I say it on my videos and I can't say it enough. I really appreciate everyone that tunes in. Hopefully, if you're not a subscriber, you'll jump over and check my channel out. Hopefully, I make a fan out of you. And I really honestly do want feedback from people. That's not just something that I say. I want to know what you think of it. If you hate the video, tell me you hate the video. That way, at least I know, hey, I need to tweak something or do something a little bit different.
Yeah.
But I do really appreciate the feedback, and you guys have really inspired me because I came into this looking to eventually do some motivational stuff and try to motivate people, and you guys are motivating me because I just wanted this to kind of record my investing journey for myself, and then it took off and people like it. So now, I want to do anything I can to to give back to my viewers and thank you, for tuning in. So I just want you all to know I really do appreciate all of those that tune in. Again, Anthony over at Malone Money Mindset and Keenan Grace over at Keenan Grace channel. I mean, you guys are definitely my biggest fans, biggest supporters, most feedback. Man, I just really appreciate the heck out of you guys. And you really inspire me to keep going. So I just want to thank everyone, really.
Yeah, awesome, man. Yeah, thanks everybody. Great community. Everybody check out everybody else's channels and subscribe. And let's just all keep growing together, guys. Seriously. So, all right. And on that note, thank you, Cody. Thank you, everybody, for joining.
Thank you.
And have a great evening, everybody. Until next week. See ya.
See you, everybody.